Good morning, good afternoon, good day. Welcome to my weekend market recap, 11th September 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website Sagar Nandi, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trade. I use the Q systems. These are the add-ons on TradeStation and Metastock platforms. And that was the last slide of the presentation. Let's continue with the live systems, starting with a look at the global markets. First, Australian index, all ordinaries, .AORD. AORD displayed a bearish headwind couple of weeks ago. Since then, price could not go up. It came down a bit. However, it still has multiple trendline support both in the weekly and the daily charts. That's why I'm not going to short it right now. One thing you have noticed earlier, and now also you can see that once again, that when the bearish headwind comes, price finds it difficult to go up, at least go up immediately. That means one possible trading strategy could be to short the call. But shorting call is very dangerous, risky. So shorting call vertical would be an appropriate strategy when you see a bearish headwind, provided there are some other signals also that are telling that the market might come down. If you did that, all ordinaries would have given a profit by the close of this Friday. This is the exact same technique that I used to trade Apple couple of days ago. I'll come back to Apple when I discuss the USA market. Australian market is continuing to be in an uptrend in the longer term, and for short-term trading purposes it is inside a triangle now. That is a deterioration from the previous webinar when it was in an uptrend. Now it is sideways. Let's see what is happening with the other global markets. Japanese market topics. This is in an uptrend. It was moving sideways for a long time. Right at the point it broke out of the sideways range. On that day I had a webinar and I mentioned that was the time to look for breakout trades. And if you took such trades, those trades are in a large profit by now. This Friday's candle is also bullish. The weekly candle is bullish. So if you bought at the breakout point, there is no reason to exit entire position. You could close partial position at the initial profit target, and using Q guideline you could continue to hold remaining position. Japanese market bullish. China market CSI 300 index. This is moving sideways. It was inside a triangle pattern just like Australian market is now. It did break out technically on Friday. However, the Friday's candle has an upper tail. That's why I am still considering this to be inside a range. Friday's breakout was not decisive. It closed with an upper tail. China market continuing inside a range. UK market FTSE index. This is inside a range. Same as we saw in the previous webinar. The range formed by watermark support, watermark resistance, and also trendline resistance, trendline support. UK market sideways and India's Nifty 50 index in an uptrend. It was and is continuing to be the strongest of the global markets. This week made a new all-time high. Well, this week price practically didn't change much. On the first day of the week, price jumped up, gapped up, but closed with a doji candle. This was a shortened week for the India market also, 4 days week. So it had a gap up on the first day, doji candle, and after that price practically didn't move. Closed the week with a doji shaped candle. In any case, it is far above the upper boundary. So we are not going to take a new long position. Any long trade taken at this breakout point, which is similar to the breakout point in Japanese market we saw earlier. Any long taken at that point, you could continue to hold partial position in them. India market bullish. Only one market, one of the global markets changed status since our last webinar. That was the Wednesday pre-market webinar. That is Australian market that was in an uptrend. It is moving sideways. So overall, you may say global market slightly deteriorated overall. Only the Australian market changed. How is the USA market? We are going to look at it now. By the way, I'm going to start an end-to-end series of trainings on Q systems. The first training is scheduled for Monday. I'll start with some TradeStation basics and I'll continue with other topics. Thanks to all of the traders, small group of traders who signed up for that. I think I'm going to love it as much as anybody else. I will share some of the tools that I use that are not necessarily Q tools. Well, to be honest, 90% of the tools I use are Q tools and some are based on icon. I'll share some of them in the sessions. Now let's look at the USA market. Let's start with the market ETFs. And one comment I want to make even before going through the ETFs is that I took a number of short trades when the market was very bullish at or near all-time high. And you know that because I shared them publicly in YouTube webinars like this, and also I shared them on Twitter and website. And the comment that I wanted to make is that I booked profit in several of them this week. I didn't hold on to them. And you will see the reason as I go through the webinar. SPY. It is still in a uptrend, clear uptrend. No doubt about that. Both weekly and daily are in an uptrend. Both has trend line supports. Now on Friday we have a very bearish shape candle. It fell down with very high volume. However, if you notice the weekly volume, very small, very small. So just one day, Friday's volume, high volume, did not make the weekly volume higher than average. In fact, it is much lower than average. That means that though price came down on Friday, it's not bearish if we combine weekly daily. And of course, the trend is up. It stopped right at the trend line support. It may come down, anything can happen in the market, but these trend lines work very well. So that was one reason, keeping an eye on the existence of the trend lines near the closing price, I closed the short trades. In fact, if price goes up from here, that may be a buying opportunity. We'll have to see if it goes up from there. Later on, we'll look at Q edge that is showing flip-flop between red and green. From there also, we may expect price to go up. I'll not buy with that expectation, but if the flip-flop continues, the next logical color should be green. But I'll come back to that later. Let's look at the other market ETFs. QQQ. QQQ displayed a bearish headwind. It was at or near all-time high. In weekly, it displayed the bearish headwind. In daily, it displayed indecision at the top. On the candle, it made a new all-time high on the high basis, day's high basis. Then it displayed a bear release signal. However, the candle shape was indecisive. And then the last 2 days of the week, price came down. Friday's flow color bearish, backdrop color bearish. We have bearish headwind. The next trend line support is further away. If I look at SPY and QQQ now, QQQ was stronger earlier, was the strongest of the market ETFs. We can see that from the relative performance sharply going up. That was then. As of Friday's close, if I wanted to short any, I would have shorted QQQ because the weekly, daily both are bearish. Weekly has this unique headwind reversal signal and the trend line support is far away. And I tweeted about the bearish headwind right on the day it came into being using real-time intraday charts, and I in fact shorted QQQ on that day. As I explained earlier, I shorted using short call vertical. Now in this case, the headwind appeared in the weekly chart. Headwind doesn't mean price will drop immediately. It tends to move sideways or drop. Sometimes it may go up, but that is rare. And even if it goes up, if it comes down before expiry, then the short call vertical will make profit. Because it is a weekly bearish headwind, I wanted to give it more time. Usually my short call verticals or long call or any vertical, usually my verticals are of about 45 days to expiry. But in this case, the headwind came in the weekly chart, so I went out further. I took it with 73 days to expiry. I think the next monthly option had about 73 days to expiry. So I traded with that one and I'm holding on to the trade with a small profit. The further out you go with verticals expiry, the slower the profit expands. So though price came down Thursday, Friday, because the expiry is far away, the profit didn't expand so much. Now let's divert a little bit on Apple chart. I tweeted about Apple and QQQ on the same day because they both displayed the weekly bearish headwind on that day. Now I took a short trade also using short call vertical, bearish trade using short call vertical, and once again because the headwind came in the weekly chart, I wanted to give it more time. I went further out to the next month, again about 70 days, 73 days to expiry at the time of entry, and then price came down. Now if it was having 25-30 days to expiry, the profit would expand a lot. Maybe it would approach about 40 to 50% of max profit, but my expiry was far away, 70 days to expiry, so I had about 25% profit. And I was looking at the intraday chart. It tried to go below the trend line support, then it was recovering. I'm in the opposite time zone to the USA market, so I didn't want to wait till the close of the day. You can see at the close of the day it fell down again, but that's fine. I decided to exit the trade at 25% of max profit, not the 50% of max profit. And why wouldn't I wait? Because there was no Q swing trade setup, and because these trend lines, one is broken now, but there is another one, they work very well, so I didn't want to take risk. And Apple is not a weak fundamental stock. It had a negative news on Friday, so it dropped heavily on Friday. But again, if you look at the weekly volume is below average. So if you look at longer term, it fell down with very small volume. You may also say when it was going up with with light volume as well. But in any case, I had a profit. I took it using the unique headwind reversal signal, and when I got 25% profit, 25% of max profit in a couple of days, I took it. Is it time to short Apple now? No, because there is a trend line support nearby. Am I going to buy it now? No, I'm not going to buy it now. But if it comes to the trend line support and reverses from there using intraday fine-tune chart, it may not be a bad idea to buy Apple, and the preferred strategy will be to use short put vertical, because then the volatility will also be in your favor. So I traded Apple and QQQ on the same day using the same strategy, short call vertical. I closed Apple because it had a trend line support. I did not close QQQ because QQQ does not have a trend line support nearby. Now let's go back to the market ETFs, Dow Jones Industrial Average. In the previous webinar, I mentioned one of the previous webinars that relatively speaking, DIA and IWM were weaker. They were inside a range. DIA was inside a range, and right from that webinar, it fell down. Friday stopped right at the trend line support. Yes, the daily volume is higher than average, and it has a staircase pattern gradually going up. And still, when we look at the weekly volume, it is much below average. I did take a bearish trade in DIA also when I discussed about its relative weakness. That was again using verticals, and I closed that trade as well. By the way, if you look at the newly introduced expected move, DIA closed below the expected move low this week. I think SPY didn't do that. Okay, SPY also closed below the expected move low. And if I look at QQQ, QQQ closed above the expected move low. So SPY and DIA closed below expected move, and let's look at IWM, also closed below expected move low. IWM was also moving sideways, is still moving sideways, was relatively weak like DIA. And I remember in the previous webinar when price was here, I mentioned that if anything, I would look for shorting opportunity because it was at the upper edge of the sideways range. But I did not short IWM. I had a short position in DIA at that time. I didn't want to add another ETF. IWM has also dropped. It is now right in the middle of the sideways range. That is a no trading area. We like to short at the upper edge, buy at the lower edge. Middle of the area is no trading zone. It's looking weak. Red traffic light, red backdrop, but I'm not going to trade IWM now. It's in the middle of the sideways range. What do we see from the USA market ETFs? QQQ, we have to say it is in clear uptrend, no doubt about that. SPY, clear uptrend. IWM, DIA, we saw they were moving sideways, they are continuing to move sideways. So yes, price came down little bit, especially on Thursday and Friday. However, that didn't change anything. The state of all the four market ETFs are remaining what it was in the previous webinar, the Wednesday webinar. And also we saw for all the market ETFs, let's check again, DIA, yes, and IWM, I'm looking at the weekly volume much below average weekly volume. So I am not bearish on the market. My view is same as in the previous webinar. There is divergence between different categories of stocks. Small caps weaker, industrials weaker, tech stocks and the overall market S&P 500, they are bullish. Does it change if I look at the market internals? Let's look at, okay, it's not responding. Let's open Metastock again. Okay, let's open USA Composites first. Looking at the market internals, first using the exchanges, NASDAQ and NYSE. First we look at the very useful percentage of stocks above 50-day moving average. For the NASDAQ exchange as a whole, it is now down to about 38%. Some time ago, it barely crossed above 50%, the midpoint, and then came down again, around 38% now. And the NYSE is around 45. So NYSE is continuing to be stronger than NASDAQ. NYSE, NASDAQ both came below the 50% level, but they are not having lower high, lower low yet. We are probably in a turning around area now. It turned into uptrend, probably it is now going to turn into downtrend, but we have to see if we have confirmed lower high, lower low in the yellow line, the percentage of stocks above 50 MA. If we look at the 3-month new high low, these color lines, they were near the extreme a while ago, and whenever it reaches the extreme, it has a tendency to pull back. What has a tendency to pull back? Some of the constituent stocks, not the market ETFs, not the market indices, but some of the constituent stocks. Almost inevitably, once the 3-month new high low hits the extreme level, higher side in this case, it has a tendency to come down, meaning some stocks must be coming down. So you could be alert and you could look at those stocks that are hitting 3-month new high low and starting to reverse using Q reversal trade setup. You could short them. In any case, this is the overall market breadth study. That study is telling now it is not at an extreme for both NASDAQ and NYSE. We don't decide anything from 3-month new high low now. We cannot say that it's going to reverse or market is going to be under pressure because of 3-month new high low, because 3-month new high low already came down. When it was at the extreme, then we could say there is a higher likelihood of bearish pressure because of 3-month new high low being at extreme high, and that extreme condition has gone away, or you may say that overbought condition in terms of 3-month new high low has gone away. No bearish pressure from that right now. Now if you look at this daily interval, we are looking at daily charts, there seems to be a bearish divergence. Not seems to be, there is a bearish divergence in advanced decline and up down volume for both NASDAQ and NYSE. However, my past experience has shown that it is better to put more weightage if the bearish divergence is happening in the weekly interval. And is it there? Let me change to the weekly interval. No, there is no bearish divergence if we use the weekly interval between advanced decline up down volume and the price move. So we don't have bearish signal from there. So when I look at the market breadth using very broad analysis on NASDAQ NYSE, there is not much reason to think that market will fall. Doesn't say market will not fall, but there is no signal from here. And if I look at the very useful market breadth total view, Nasdaq, this market breadth total view is calculated based on the 4 major indices and 2 composites, the 2 exchanges as a whole. Again, we look at the overall picture. Percentage of stocks above 50 MA crossed below 50% level at around 45% for the USA market as a whole. Again, probably starting to turn around from uptrend to downtrend. We'll see how it moves next week. If we look at the 3-month new high low for this complex calculation, didn't quite reach the upper extreme, but in any case now it is in the middle, so we don't expect a very high bearish pressure from 3-month new high low being extremely high. That is not there. Is there any Hindenburg? No. Is there any large distribution count? No. In spite of the market weakness, in fact Q edge was red color for last I think 4 to 5 days in a row. If I remember correctly, right from previous week's Friday till this week's Friday. I'll have to check how Friday closed. But until Thursday, I noticed Friday and Monday was a holiday, Tuesday, Wednesday, Thursday. 4 days in a row, we had QH, sector industry stock, advanced decline breadth, red color. In spite of that, there is no large distribution count in any of those days. So price came down little bit, but not ferociously, not with distribution count. And no Hindenburg is also there. So I am not thinking, just like I shared in the previous webinars, I am not thinking that price is going to drop sharply suddenly, because it has not happened before, and that is one more reason I closed many of my bearish trades. Isn't it nice? I shorted when most of the traders were bullish, and yes, SPY, QQQ were making new all-time highs. I started shorting at that time and sharing them before knowing the result. I closed a lot of them with a profit by Friday. Some I'm holding, like I mentioned, QQQ, short call vertical, I'm holding, but I closed a number of them by Friday with profit. So USA market breadth total view not showing major weakness. What kind of stock is in favor now? Growth versus value magenta line. It's continuing to go up. So in spite of some weakness in Apple and Google on Friday, and in spite of market being weak throughout the week, growth is continuing in its trajectory, upward trajectory. Growth versus value, growth is doing better. And small cap versus large cap, small cap was underperforming, started to do better, and last couple of days is starting to pull down again. So small cap is not a reliable place to be right now. And we saw that from IWM also. IWM was relatively weaker. It was moving sideways. It came to the upper edge of the sideways range, and then it started to go down, and small cap started to underperform again. From this, what kind of stocks we may focus on? Everything else being equal, for buying we may look for growth stocks and not small cap stocks, maybe mid cap or large cap and growth. That is a high level view from market breadth study. Of course, finally we'll make our decision based on Q360 degrees analysis. How did megacaps do? Megacap top 20, bearish headwind. From there price came down. When it came to the yellow direction line, it was also close to a trend line support. From there price went up. Where did it stop? It stopped near the upper boundary and the level where bearish headwind had come earlier. So if we had taken a long trade when it recovered from the yellow direction line, which would be a pullback long trade setup. Our initial profit target would be the upper boundary and we would put profit there. And in fact, in one of the previous webinars, I explained why one would book profit there. Not only because the risk distance was covered, one additional reason would be that the bearish headwind was at the same level. And another reason I mentioned in that webinar is that we see constant flip-flop between mega cap and non-mega cap. And when mega cap was outperforming for so long, it was only expected that it was going to most likely underperform. And that would be another reason to book the entire position, not partial position profit if we traded the mega cap top 20. And that analysis that I shared in the previous webinar would be useful because it is now starting to underperform from Friday, and more importantly, it came to the trendline resistance, displayed the bear release, came down with a bearish shape and bearish traffic light color with high volume. So the analysis that I shared in the previous webinar, why it would be wise to close entire position profit, not only partial position, came to be very handy, meaning in trading terms, handy means came to be a very profitable analysis if you acted on that. Right now, I wouldn't trade the mega caps looking at the traffic light color. And if I look at it using the, let's look at it using the usual 3 chart template. The backdrop, shape and color weekly, both are bearish. Daily flow bearish, reversing from trendline resistance with bear release signal above average volume from the level where bearish headwind came earlier. In the momentum signals, HGSI like signals, bongo turned red. We have a PSAR reversal and a bearish pocket pivot. So there are enough, not a lot, but some momentum signals that are bearish, and more importantly, the Q signals are clearly telling us not to buy. In fact, using the concept of box setup as well as bound setup, we could look for shorting opportunities and take them on Friday using intraday fine-tune chart. I'm analyzing this Megacap top 20. It's a custom index, it's not a tradable instrument, but the concept that we apply to individual stocks and market ETFs, market indices, can be applied to this Megacap top 20 custom index also. Why it's useful? It's useful to know whether it's good idea to buy megacaps now or not. And the analysis that I shared in the previous webinar told that it was not a good time to buy mega caps, and that analysis came out handy. If anything, we could short it on Friday. Is it bearish? No, it's at the upper edge of the sideways range, so it's expected for the price to come down from there, but it is not bearish. It's just tilting down from the upper edge of the sideways move. So we still have not seen much change in the market scene, you may say. And if I look at now sector, industry, stock, advanced decline breadth, the very useful 1 month to 1 day sector, industry, stock, advanced decline breadth. Remember how many times I am showing, and if you are having Q edge, you see that the 1 and 2 day periods keep on flip-flopping between red and green. When it was green 1 and 2 day periods, if you now look back, I actually started to look for short setups, knowing that if the flip-flop continued, some stocks were going to come down, and I traded using Q 360 degrees analysis, weak fundamental stocks preferably, certainly in weak industries with Q short setup. That was when the 1-2 day periods breadth was bullish, full, mostly green, because I knew that it was most likely going to turn into red, and it turned into red, and I booked my profit. And I booked profit. This was another reason I booked profit, that if the flip-flop continues, it's continuing forever it seems. If the flip-flop continues, it will turn to green. Some of my trades were using options, and options erode profit very fast, when unbelievably fast, when the stock goes against us. So I didn't want to take a risk. This is a oversold condition, keeping the flip-flop in mind. So that was another reason, other than some market ETFs hitting trendline support, and of course the stocks, the short stocks or shorter option trades giving me significant profit. As per plan, I closed many of them. 1-2 day periods are red, and not only that, now 5, 10 and 1 month, all the periods have turned red. Can it be more red than this? Yes, especially the 10 days and 1 month periods, they can turn more red, but some time, even if Monday, Tuesday it starts to go down, at some point it will be oversold. And again, I started shorting when it was overbought, and now it is approaching oversold. Why will I try to short now? I am booking profit in shorts, and I have not started buying many stocks yet. But if the oversold condition goes away that we see in QH, I will like to buy. Is the time there yet? No. Why? I know that, or most likely not there yet. Why? Because of the bucket analysis. If the percentage of stocks in the lowest bucket goes to 30-40% level, then it's a very clear oversold condition. Oversold. Am I mixing up overbought, oversold? If it goes to 30 to 40% level, it's oversold, and that's the point I'll start to look for long Q360 degrees trades. It's getting there, but not there yet. And now overall the market is bearish as expected. On Friday, the percentage of stocks below lower Bollinger Band, sorry, not lower, below mid Bollinger Band, midpoint is the neutral point. Percentage of stocks below mid Bollinger Band for S&P 1500 stocks, it came down, or you may say increased, from 59 to 68. That's a modest jump, but not a very big jump, not even 10%. So Friday, if you look at sector industry stock advanced decline, it was pretty bearish, but the movement across the Bollinger Band segments, they were not that much. It's an oversold condition here if this percentage goes up down by 20%, around that. It's not there on Friday. So it was a bearish day, but not a severe bearish day when we look at the bucket analysis pie charts and compare Thursday and Friday. Now last couple of days, Thursday, Friday especially, QQQ SPY dropped. However, the market is dropping for several days, as I mentioned, and now I can confirm Friday was also bearish, right? Friday was also bearish. That means from previous Friday to this Friday, every trading day, that is 5 days. But there was a public holiday, so Friday to Friday, every trading day had a bearish breadth in sector industry stock advance decline. That is unusual. That has not happened in recent periods. Now that is a concern, because continuous 5 days of bearish breadth has not happened for a long time. If that is a signal of sign of things to come, then the trend line supports in DIA, for example, and another, I think DIA and some other ETFs may have trendline support. Those may be broken if that continues. So that is a concern, that for 5 days in a row, sector industry stock advanced decline breadth is bearish. That has not happened for a long time. And so far, that is the only concern that we have seen from all these studies. Now, if I look at the sectors in more detail, sector performance, one day and 2 day, that is Friday and Thursday, Friday together, only one sector is up, that is energy. On Friday, practically it was unchanged. So over 2 days, only over, you may say practically over 1 day period and 2 day period, only one sector is up. That's also on the 2 day period. That's a very weak picture. And if I take a step back further, look at 5 day period, all sectors are down. 10 day period, two are up. Which one are they? The green color. Energy. Energy is being up, down, up, down. Energy is up over 10 day, and the other one is healthcare. That is a defensive sector. And over 1 month, only two sectors are up. Blue color, that is healthcare, defensive sector, and infotech. But practically infotech is unchanged. So we see that practically speaking, if we leave energy which is being up down, only healthcare is having some strength remaining. If we can call it strength, some strength remaining when we take a step back, and all the other sectors, whether defensive, non-defensive, whether it's utilities, defensive, real estate, defensive, consumer staples, defensive, they are down, as is non-defensive ones like consumer discretionary, financials, industrials, materials, all are down for all these 3 periods, 5, 10, 1 month. That is closer to being a oversold condition than an overbought condition. Of course, not overbought, not neutral also. It's closer to being oversold, but I will be happy to see in a way that the percentage of stocks in the lowest bucket go to 30-40%, and then I find trades using Q reversal bullish setup like bounce setup, for example, because there are plenty of fundamentally strong stocks waiting for the right time to buy. Now, instead of looking for trade setup, why I am not looking for trade setups? Because market came down Thursday, Friday, but we don't see much bearishness in the market. What will market do next week? I'll have to see and decide trades. I could look for some trade setups today, but why I'm hesitating is, just like in the previous webinar I mentioned, I don't have a preferred direction after doing all this analysis. That may change if I look at the technical breadth. Let me look at that. This is a powerful analysis also, very useful. Makes money if you look at it regularly. At least it helps me improve my result. Technical breadth, the balance between bullish and bearish signals, first using the weekly interval, and all signals 91% bearish. Strength 86% bearish. Trend continuation 93, reversal 90%. It is as bearish as it has happened in a very long time. So again, this is probably closer to being oversold than not. Almost hitting 90% level across all the categories. Can it go down further? Yes, but it is very close to or at oversold point. Now, could we have a sign that it was coming? Yes, and I mentioned that in the previous webinar. That was from the percentage of stocks displaying weekly bearish headwind. In the previous webinar, I showed it was much above 1%. I think it was above, around or above 2% also. And now you can see in this version, I keep on improving the systems for my own use. Instead of calculating in my mind, I can see the percentage now. The percentage of stocks, what stock universe I am using? All liquid stocks. Only liquid stocks, all liquid stocks in the USA market. 3.1% of those stocks are displaying bearish headwind in the weekly interval. Whenever this percentage is 1% or more, then the system tells us there is a likelihood of reversal. I shared it in the previous webinar itself. and now we see it deteriorated further, became more than 3%, from more than or around 2%, now it is more than 3%. That is a reason for concern. If it came down or stayed the same, then the market was stabilizing, but market came down, so bearish headwinds increased. Headwind is a reversal at the top signal. Market was at or near all-time high, so it went above 1%, went above 2%. Now it is more than 3%. That's a reason for concern. So from this point of view also, I'm not ready to buy yet. What was the other point? The bucket analysis. The percentage of stocks in the lowest bucket has not hit an extreme level yet. So I am not ready to buy yet. But we see possible signs of oversold condition from this weekly technical breadth, and we saw that from QH sector industry stock advanced decline breadth. Oversold but not buying time yet. That's why I am reluctant to decide on my trading direction. And now you see live result of using the technical breadth, all the signals plus this percentage bearish headwinds in play. The more you study them, the more confidently you will be able to use them in your actual trading rather than just listening to me. There is a difference between listening to me, watching my trades, and actually trading, and that difference is putting the things in practice. Over time you will be able to put them in practice. So see first how I am doing or another Q trader is doing using the systems, then you do yourself, and afterwards you may be helping others do the same. In any case, the weekly technical breadth is bearish, and we had bearish signals from it, from the headwinds in the previous webinar. That was very helpful, and helpful in trading terminology means profitable. What about the last trading day of the week? That is also bearish. 82% of all signals, 65% of strength, 89% of continuation, and even reversal. That is also bearish. If I saw reversals bullish, then I would be more encouraged to look for buying opportunities, but that is not so. That is also not letting me decide on a trading direction yet. So I will watch how the market does next week and decide. Market came down very little, in fact, and we saw the weekly volume was not much for the market ETFs. The market trend in terms of market ETFs didn't change. Market internals are not showing any distribution count, so I'm not thinking it will drop sharply suddenly. There is no signal yet, so I'm not going to look for new trades. Instead, maybe one new trade. But let's look at the stocks that I analyzed and shared earlier before knowing the result and see how I traded it. Sometime here, I think here, I shared a bearish trade on X US Steel. It was already in a downtrend, then we had a bearish flow. The weekly backdrop color was bearish, so that gave a go with flow short setup. And after that, price came down as you would expect. The trade worked again. On Friday, price tried to go up but closed with a bearish shape candle. Closed little bit higher from Thursday, we know, because the volume bar is green. We know price closed higher, but if I look at the candle shape, it is very bearish. So a bearish trade taken on the day when I shared it, go with flow short setup, that is working all right. And this is one trade I in fact closed by looking at the alternate chart. It went below the 50-day moving average. In the alternate chart, the yellow line is 50-day moving average. It went below that, and then next day you see this dot here, that is the green candle low. Sorry. Let me right click and see what is this. Failed extreme. Yes, green candle low. green candle low. So a green candle low came on Thursday and it regained the 50-day moving average. So that was the time I thought it was not required to hold on to the trade, and I booked profit in my short trade in X. I used the green candle low and the fact that it was reversing from the 50-day moving average. And it has already come down significantly from the recent swing high. It was only expected, or I would say it would be normal for price to go up somewhat and then probably fall again. So I had a bearish trade using options verticals, but those also erode profit. I didn't want to hold on to the trade. And also I was watching the market. It was dropping, but as I explained just now, there were not enough bearish signals. I think the industry was also not so weak on one of these days, at least during real-time analysis. So in any case, I booked profit in the trade. Now, when I shared X, I in fact shared it on the forum, my website, sagarnandi.com, and I proposed two stocks and asked which one would you short in same industry. One was X that I shorted, other was ArcelorMittal, MT. And in case of ArcelorMittal MT, I mentioned I was not going to short because it had a trend line support. And you see how effective the decision was. What was my credit? I was simply following the system I used. That was my credit, that I was following it with discipline. One reason was that it didn't turn magenta on that day. It did turn magenta the next day. But the bigger reason was that the trend line support was there. So I didn't short it, and that would be a good idea. Choosing X over MT was a good idea, and the Q analysis led us to the right decision. So X, I closed, MT I never traded. Let's look at UAA now. I shared it as a breakdown trade on this day, and it was also a go with flow short trade. When it came to the lower boundary, I mentioned that it was the point to book profit, and I closed the trade. And recently, couple of weeks ago, I shared a post on my forum explaining for swing trading why I like to book profit at 1:1 reward risk ratio. And this shows the reason. Stocks don't go down in straight line, don't go up in straight line. So if you are swing trading, average holding period comes to about 5 days, 7 days, it makes every sense to book profit at 1:1 reward risk ratio, because it's more likely than not that it will recover somewhat after that. Exactly what happened in UAA. Now imagine if you had a trade with options. Well, I didn't take the trade at the close of the day. I have real-time system. All Q systems are real-time. I took the trade in the middle of the day. But even then, if you traded it with options, this Thursday's recovery would turn your trade into a losing trade from a very large profitable trade in terms of percentage. So that was another real life example showing why I do what I do, that is, for swing trading I like to book profit at 1:1 reward risk ratio. Now if the market was bearish, which was not true, if the market was bearish, then there would be a case to book partial profit and hold on to partial position. But market was not bearish. Even today is not bearish. So if a market is not bearish, if anything it is bullish, maybe extended in some cases, but bullish, then short trade should be, or not should be, short trade may be better to be closed fully at the initial profit target. And the reverse is true. If we are taking a bullish trade in a sideways or bearish market, it's better probably to book the entire profit once the initial profit target was hit. So I mentioned about the trade when it occurred in Q systems. I shared it, I took it, and I also shared it when it hit the initial profit target. I closed the trade, and that was also a good decision. Now the weekly backdrop is bearish. If the daily turns magenta again next week, then I have another go with flow short setup. That's how swing trades work, trying to catch every swing of the stock taking small risks in each trade. Target is to have at least 60% success rate, and if you follow the trade ideas that I share, if you follow them, then you would know that percentage is more than 60%, but you may check that for yourself. I am almost at 1 hour point. Let me share some more trades. It's good to look back on them and see how they worked. Xylid, I took a long trade and shared it as a go with flow long idea on this day. I mentioned on this day, though it had a long lower tail, my GTC stop order was hit and I exited. Now, if you look at the stock now, that exit was alright. Yes, it had a bullish shape candle. Next day it went up, but it didn't hit the profit target. My entry price would have been somewhere here or here. Profit target would be at the upper boundary, but it came down again. It would have hit my stop loss again. So there was no point trying to hold on to a trade that has already hit the stop loss. That is the learning from this. We are trading. We are not guaranteeing every trade to be profitable. And we have a stop loss calculation that allows us to take narrow, small stops, small losses in trades that doesn't work with us. It is my experience, and you are trading, most of you are trading for it's a right decision to exit your trade when the stop loss is hit. No point trying to prolong the pain. Take that trade out and move on to the remaining trades. So even if you didn't exit it on the day I was hit with stop order, you would have probably exited again on Friday. Yes, it did close with indecision shape candle, but the weekly is also bearish. I think it's okay to close that trade. Hawaiian Airlines, that's also a good stock to look at. I look at one more stock after Hawaiian Airlines. I shared HA, very strong fundamental stock around this point, and very clearly mentioned that Q traders would not take a long trade unless the trend line trend line resistance was broken, and that is still not broken. So the decision that I publicly shared, that we should wait for the trend line resistance to broken, is working very well. I'm still looking for it to break out of the trend line resistance. It's a strong fundamental stock. In fact, there are several airline stocks that are not coming down much, still moving sideways at a lower price level as if creating a base, and I expect not only HA, there are several other airline stocks. Once they break out of the base, they may move significantly, and that would be the right time to buy. Okay, last stock, Dell. Let's look at fundamentals. Now, I tried to look for long or short trades on Friday using real-time system. In fact, there were not many immediate opportunities. Now, Dell I found as one stock that was looking somewhat weak from some angles, but even then it didn't give a very convincing trade. And during real-time market hours, I was using Sonar, Q Sonar. I was using this specific Q Sonar where if I drop a list of stocks, the stocks with maximum number of trade setups float to the top. And I drop the list of stocks with liquid options in that. I looked at several stocks. Interestingly, I didn't find a single convincing long or short trade. And that is a very powerful decision making tool for me. When I drop all the liquid options into this sonar, I don't have a convincing long or short trade. That's a way of Q systems telling that better don't trade. That was another reason I am not deciding on trade direction this weekend. Having said that, I did look at Dell. However, though it has some weakness, you see the valuation medium, earnings growth is actually quite good. For 3 years, 3 quarters positive earnings growth. Not only that, 3 years, 3 quarters positive revenue growth. Why I am sharing the stock, I'll mention that. Fundamentals quite strong. The industry was weak in itself. 72% of peer stocks went down. on Friday, and if you look at the rotation using Q edge, the industry is weak, very weak. Earlier it used to be one of the strongest, now it is very weak. So industry is allowing me to short. If I look at the charts, yes, it is giving a go with flow short setup. You can see that from here also. Flow candle, and this dot now shows whether there is a Q trade setup. Yes, there is a go with flow short setup. Interestingly, the bearish headwind and indecision at the top happen at this point. Backdrop is bearish, so it is giving a short trade setup, but fundamentals are very strong. That's why I mentioned that I didn't find a trade that is very convincing. Friday was weak, so I was looking for bearish trades, but I also looked for bullish trades. It didn't get any convincing bullish trade either. If at all I wanted to trade something, I could trade Dell. I might have traded Dell, but that would be using longer term. I don't know exactly what duration, but at least 45 days to expiry, short call vertical. But not many convincing bullish or bearish trades that I found. So I will keep looking at them, and you will keep looking at them, and if we find them, I'll share at least some of them on the forum. Let me end today's session here. We are at the 1 hour point. The examples that I will let me no point. There are several other stocks shown here for some reason or other, but I'll not spend more time now. You may look at those stocks yourself and see how you could apply the Q systems to decide to trade them at the perfect time, or decide to wait for the perfect time. That's all for today. Thanks a lot for joining. I look forward to seeing you in my regular webinar that will be on Wednesday, and the special class that will start from Monday. Thanks a lot once again. Keep safe and trade profitably. Thank you.